Good morning, it's Steve O here from Signal Centre. Welcome to Talking Bull. It's edition 491, and I'm going to run through the markets, look at the highlights overnight, and then look at the drill down to the technicals of the different asset classes as we go. So let's take a look at the markets, what they're doing at the moment. The overnight news, obviously, pretty important news overnight. We saw Asian markets have enjoyed a welcome rebound overnight with indices throughout Japan, China, Hong Kong, Australia, and the obviously overnight assets, the US and the UK and European indices all gaining ground over the course of the session. This move came despite the inception of the FOMC's tapering phase, with power leading a $15 billion reduction as expected. With asset purchases expected to end by June, the Fed have reiterated that they will be patient when it comes to raising interest rates. Energy prices have been on the slide this week, with Brent down to the lowest level in almost a month yesterday. Today's OPEC Plus meeting is unlikely to herald any major shift away from the strategy of raising output by $400,000 a barrel per day each month. Elsewhere, the Bank of England meeting looks set to provide volatility for sterling, with markets pricing a 62% chance of a 25 basis point rate hike. However, with markets also pricing 4 hikes in the next 7 meetings, traders should keep a close eye for any forward guidance from Bailey today. So that's something to look out for. So let's dive in to the FX markets, and we can take a look at dollar and how has the dollar been impacted by the tapering phase of the Fed buying program, and it has reacted positively. We can see from the price action yesterday, we've actually formed a morning doji star formation with this inverted hammer at the bottom of the market, and support found at 93.82 in dollar index, and the reaction higher has been pretty impressive, and we've engulfed all of the previous day's price action by this morning. We can see this obviously on a daily chart. So we are in this constructive phase on the dollar index, and we do feel there is further upside to play out. Taking another look at the weekly chart, but zooming out a bit, we've got this double bottom formation. The neckline was 93.44. We've held there. Very supportive looking candle from last week. Really need to challenge the resistance now at 94.74 with good momentum to really play out and see this measured move target play out. We're looking at 97.72 over a longer term period. This would be the measured move target, and also 61.8% Fibonacci retracement level. So that's the sort of overall general technical opinion we have for dollar. Obviously, this impacts negatively on Eurodollar. This is showing a head and shoulders formation, which is negative for price action. The measured move target for this formation, which is in play now, is looking for a move down to about 111.60. So price action at the moment is moved sideways over the last 3 or 4 weeks. But last week's negative candle looks to be dominant, really finding support coming in at 115.25. That's within reach today. If we look at the daily chart, we're not very far away from it. So, and we can see all the way back here, the sort of vacuum or void that we should see on a break of this 115.25. So pretty negative for Eurodollar. That could play out quite aggressively. We've still got a few more volatility events, as we said, Bank of England's interest rate at midday today, and also tomorrow we've got non-farm payroll. So are we at this moment looking at this market really challenging those supportive areas? Cable. Looking at sterling against dollar, this double top formation again looks to be playing out. We can give a measured move target on this. Let's get a horizontal trend line coming in there. That's the daily, and we're really looking for this measured move target to be targeting a move to 131. So that's a long way off at the moment. We're trading at around 136. 136.40 at the moment. So no, we're not. We are yes, we are 136.41. But this does look like we're posting lower highs, which is negative for sentiment. The support coming in at 134.15 would be a real challenge, as it was 134.85 was a peak back here. So around about 134, 134.15, the figure would be confirmation of this breakdown. And again, there is slightly better support, not quite as much of a vacuum as we'd see in Eurodollar, but cable has held up a little bit better. Looking at euro sterling, we can see there's a slight downward pressure on the euro against the sterling, and we can see that resistance coming in at 85.15, support coming in at 84.04 for that. Dollar yen, that is also looking positive, obviously with the dollar aspect, but yen has been quite negative overall. Let's take a look at the slightly longer term chart on this. Again, it looks like we're forming some sort of bullish flag, where we've seen this resistance previously, 2017 and 2018. So we are challenging this area. The 114.70 level is really key, and really need to sort of like break ground above there with some good momentum as well to really sort of like challenge higher levels on the dollar yen. So at the moment, yen is putting up a brave fight in the wake of this dollar bull run. Aussie dollar is forming a potential head and shoulders. Remember, it will not be confirmed unless we get a break of this downward this neckline here, and that would form a measured move target down towards 60 to the figure. So plenty to sort of like get our teeth into there. On the weekly chart, that's forming almost an evening star formation, not quite. The body of the last week's price action wasn't quite right for that, but it's still the same sort of formation, so be aware of that. Shorter term levels to look into on the Aussie dollar. We've got support coming in at 74.12 and resistance at 75.57, a little bit of a way away. We're trading at 74.30, so the 74.12 does look a little bit suspect at the moment, a little bit viable. So a break of there should open up a further downside towards 73.15. Let's take a look at cryptos and Bitcoin. Bitcoin is forming a head and shoulders formation. I'm going to redraw this shoulder. It looks like a bit more of a complex formation to me, but we're still seeing this sideways price action, which it's almost like a pent up bottle of fizzy drink. So if this is being shaken and shaken and shaken, sideways price action, and we're expecting the volatile move, and potentially this could be higher because we've had some strong dollar price action over the the last few weeks, and this really hasn't impacted too badly on Bitcoin against the dollar. This is BTC USD. We're seeing this sideways price action continue. As I say, this is a negative formation potentially, but we have to be aware that we've not, quite recently formed that all-time high, and quite positive noise coming out of the US on the back of the SEC allowing crypto ETFs and passing law on that. However, you got the downside where China have banned it completely. So this will obviously continue to be volatile, and we'll just have to wait and see where that breaks. Really need to see price action clear the 58,000 level to turn negative on this. This will confirm the head and shoulders formation, but a break above the 64,300 level, and it'll open up another assault on the top side. So very, very mixed on Bitcoin. The only caveat to that, I think, is we're seeing pretty toppy candles. We're seeing a lot of bearish divergence, prices moving higher, volume moving lower, momentum moving lower. Potentially we're forming a evening doji star formation on the Ethereum. So look out for this. If we do get a negative day today, this could have a further negative impact on this coin. Ripple shooting star candle formed yesterday, after a reaction above the 50% Fibonacci retracement level was contained. Cardano also, this has been under a little bit of pressure since its all-time high move on the 2nd of September up to 310. It has been these lower highs being formed all the time, and we have really support coming in at 180 to 190. A break below there should open up a bit of an accelerated move down to 163, we expect. We've really got to recapture ground, in my eyes, above the 230 level, definitely above the 245 level, to really convince me that this will be moving higher. So negative overall. Bitcoin is the daddy of them all, and it's a little bit mixed. Would maybe be shaded, I would say, by the bears at the moment. Commodities, as we mentioned at the start of the program, we have seen oil prices get smashed, and we were talking about this bullish channel that we were in, a possible potential break of it earlier in the week, and it has broke it considerably. Yesterday we had oil inventories out, and this OPEC Plus meeting today obviously is looking pretty negative at the moment. So let's take a look at where we can pick up some support resistance levels to look at today. Support really coming in around about $78.90 to $79 on WTI crude oil. Resistance, I would say, coming in at $82. We're trading at $80.60 at the moment, so we're right smack bang in the middle of this range. Bearish momentum is stalling slightly. We're getting a bit of an uptick. However, we will find resistance at the bottom of this bullish channel. Same sort of thing in Brent crude oil. The bottom of the bullish channel comes in at 83.30, trading at 82.52, and the support comes in at 80.67. So again, we're still expecting further dollar volatility. This will impact on oil also, but the OPEC Plus meeting really overall guidance on that. Natural gas has stalled and is reversing after the punch higher to 590. Didn't manage to quite reach the $6 psychological level, and we reversed quite sharply over the last 12 hours. Support is at 570, resistance at 590. A break either way should lead to a little bit more of an extension. Gold obviously had a big impact with the dollar strength coming in over the last few days. We've seen gold under pressure. We got down to just below 1760 support, 1758, 1759, and we've reacted higher from there, and 1778 has capped price action at the moment. Still potential for a little bit more upside, positive at the moment, but I feel gold is one of those that is going to really be impacted by this dollar strength, and obviously non-farm payroll tomorrow. Gold also tends to sort of like have a negative impact. It's over the last few non-farms we've seen price action move to the downside in gold. This bullish channel is broken, and we've seen price action open up. Support coming in obviously at the 1722 level, the larger support coming in at 1677, and above we've got 1815 and 1834 in gold. Now let's take a look at indices. Indices overall has been pretty positive. This is the daily chart. Open and closed around the same level in FTSE. We did have a dip down to 72.34 and a move up to 72.84, but price action still hanging around those highs. So the high 73.07 is within easy reach today if we can get this positive momentum to continue. Looking at the hourly chart, we've broken above the Ichimoku cloud, which is positive. So yeah, further upside in FTSE would be expected. On the DAX, we've punched up to all-time highs above the 16,000 level. Let's take a look at, let's get a price label on here. So all-time high 1662. Previously it was 1631, and we've hit that overnight and early in this morning. So initially rejected it. This was quite a pivotal level, obviously big psychological level at 16,000. Potential again, I think, even if we do have some sort of retracement, we should find some dip buying support coming in at 15,940. Dow Jones taking out the all-time high again. Same old record, 36,195, and we're hanging about there. No sign of any retracement yet. Although remember, we have seen momentum stalling as prices moving higher. Bearish divergence littering all the indices. Nasdaq punching higher again. All-time high coming in now, 16,226. Momentum still dropping off as we push higher. So feels like one big bubble to me, but who am I to question the market? 4,670 all-time high in S&Ps. That's the new one, and hanging about there. So for me, it does feel like we could get further upside, but be aware of the bearish divergence which you're seeing across the markets. Aussie 200 got up to 74.44, trading just below that currently, and China 50 reacted nicely from the Fed tapering last night. 15,350 support comes in. We've got resistance of 15,640. Above there, 15,700. So although we have seen a positive reaction, again, this sort of divergence that we see with the momentum is a concern. Forming a head and shoulders in Hang Seng, reacted from previous swing low support. We could potentially have broken the neckline and retesting before the actual move continues higher, or maybe depending on how prices move from here, 25,225 really seems to be sort of struggling for me on the shorter term levels. Maybe this was my gun to head trade yesterday, which ended not getting stopped out, but was obviously offside on the close. Shame. Nikkei as well. This is, let's take it away from the 1 hour chart. The daily chart reaction higher has been positive. However, it's forming a bit of a doji, so it doesn't look great from a more medium term perspective. Intraday, we should see this market really challenge the support that we've had over the last week or so. So that's where we are on the markets, and let's take a look at the gun to head challenge, which we just discussed. Closed, where did we close last night? We close at 25,128, so offside by about 0.4 R. We'll show all the results of this week's Talking Bull when Joe gets back. He's the man who organizes all the Excel spreadsheets, so that will be something to look forward to with Joe. So that's it. So what am I looking at this week in terms of the markets? Out of everything that we've looked at, I feel like we've got to really take a look at Eurodollar. Now, Eurodollar for me has will have resistance up at 115.62 to 115.75. But for me, this breaking of the 115.25 could really open up a move to the downside. So I know we're expecting the non-farm tomorrow, so we may get a sort of sideways price action, but I'm going to go for a good risk reward trade, quite an aggressive risk reward trade. I'll take the last couple of hours. Actually, I'll leave the stop roughly where it is, and I'll look to target a 3-to-1 risk reward on this. So selling Eurodollar 115.53, targeting a move to 115.83 and stopping out at 114.63. That's my gun to head trade idea. I've got a gun to my head, so this is a bit of fun, and this is what we would do if we had to pick a trade right now. This is one of the selling Eurodollar. So the day ahead, let's take a look at what we've got coming up. We've got 9:30 UK construction PMI expected to rise to 54 from 52.6. Bank of England rate decision expected to be raised by, it says 15 basis points according to IG Morning Call. Others are saying 25 basis points, with the outlook on inflation likely to influence GBP direction. So let's listen out for the outlook as well. US initial jobless claims at 12:30. Initial claims expected to fall from 281,000 to 275,000. Markets to watch, obviously, for that US indices and the US dollar crosses. And obviously, remember, non-farm payroll tomorrow. So thanks for joining me today. I hope it's been informative, and I look forward to seeing you again tomorrow. Take care.